Good evening, everybody. Glad you could join us. Stiff losses, and then most of them erased. It started with China, then Greece. Worries about economic weakness, political turmoil. They unnerved investors around the globe today, and that worry spread to our own markets when the opening bell rang this morning. The Dow, right out of the blocks, tumbling as much as 222 points, but then sentiment shifted. All those worries basically brushed off. By the close, the Dow was down, but just by 51. The Nasdaq rose 25 points, and the S&P fell less than half a point. Why the turn of events, and how concerned should long-term investors be about events happening overseas? Our Dominic Chu takes a look.
The holiday season usually brings the gift of stock market gains for investors, but the last couple of days have given some a moment of pause. Fresh worries from around the world seem to rattle U.S. stocks earlier in the day. For one thing, China's Shanghai Stock Index posted its biggest one-day drop in around 5 years as concerns about economic growth and new restrictions on the country's bond market roiled investors. And then there was Greece. Greek stocks had their worst one-day drop in over a quarter century on fears that upcoming elections could call into question the country's membership in the European Union. While the downside moves were dramatic, some experts don't believe they will have a lasting impact on our markets.
I don't believe that these events in Europe and in China are likely to escalate to the point where they have a material impact on our economy. And therefore, I think any effect that it has is temporary and should be used as a buying opportunity.
One other area that has a lot of investors concerned is the sharp drop in oil prices. Bulls point to lower energy prices as fuel for a new bull run. Lower energy prices help companies trim costs and boost profits. It also lets consumers pocket more savings that they'll hopefully spend, which also boosts the economy. But bears say that oil prices are low for a reason, because world economic growth is slowing, and some expect prices to keep falling.
There's a long history to energy prices way overshooting or undershooting any analyst's view on what fair value is. So we may continue to see some downward pressure for a while in the oil markets.
Still, over the course of the next year, many experts believe the bull run for stocks will continue, albeit at a slower pace.
We expect a single-digit return out of the markets next year instead of more, is that valuations have already come a long way. The market isn't cheap anymore.
Market risks from around the world will be a theme to keep an eye on for the foreseeable future. But whether or not they truly derail the markets is still up for debate. For Nightly Business Report, I'm Dominic Chu.